You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Gurwitz, Managing Director of the Charles Nenner Research Center. Welcome to the show, David.
Thank you very much for calling. It's always a pleasure to be on.
I know people like to attribute events in the real world to what's happening in the markets. In Canada, they elected a left-wing government in Alberta, the oil-rich province, and Janet Yellen has said equities are too hot in the U.S., and I noticed both the Canadian and U.S. equity markets are down today, and your feeling on that?
Well, what I'd like to do to answer that, being that we've been on, talking for several months, let me read the research that we sent out today. We send out an update Monday, Wednesday, Friday on charts on the weekend. And all you listeners are invited to write in and say they heard us speak. Go to charlesnenner.com, and then they can start receiving the research so they could see themselves what we're saying. Covers stocks, bonds, commodities, and currencies. And so let me go through the stocks, because that's obviously what you just asked. Let's see what we said today. Being that I edited it, you'd think I'd remember it, but that's a separate thing about remembering.
I can't remember what I had for breakfast. So
well, yeah, that I can remember. That those are meaningful things, Anyway, stocks, bonds, commodities. We've been calling for this top for quite a while, and so here's what we wrote today on 4 stock-related areas. I'll give you the overview first. One is the S&P NASDAQ, which of course we talked to Dow too. Then Canada. We've been covering the TSX quite a while. Europe, we cover 3 things: the DAX, the FTSE, England, and the AEX, which is Amsterdam. DAX is Europe. And then the VIX, which is a volatility index. That's the stock world we cover Monday, Wednesday, Friday. Those are pretty heavily traded areas, and that's the reason we cover it. We have clients of all types: hedge funds, family offices, individuals. So we kind of give them the things in this that are the most covered things. S&P, we wrote today, the expression, quote, sell in May and go in May, end quote, go away, end quote, appears to have application once again. Cycles are down, sell signal continues in U.S. equities. In order to see more of a correction, our short-term downside targets still need to be reached. First, S&P 2062, NASDAQ 4385, and Dow 17663. By the way, when we start our update every day, we always say S&P NASDAQ are futures prices, and the Dow and the currencies are cash prices. And we say we continue to stand on the sidelines. So we got out of stocks. We caught a pretty good run. It's been a pretty good run for 6 years. We've been on buy signals for most of it, but not all. But we think we've been calling this top for a while. The TSX is on a sell signal, Canada. In order to see more of a correction and close below 15,110 is needed. Notice in the research we give you direction and level, and that's the key. Timing, direction, and level. The DAX continues to move up and down 5%. Cycles are down. Sell signal continues. Sell signal means don't be long, doesn't mean go short. Similarly, we need closes mentioned in our last update to confirm a more serious correction below DAX 11,270, FTSE 6874, and AEX 481. So again, we give you very specific levels, and people put stops in, and so they can kind of relax. The VIX, the volatility index, cycles have bottomed. It's on a buy signal. We're seeing the expected bounce, and we give you 2 upside targets. First 15.85 and then 18.30. They're still valid as long as there's no close below 12.35. So those are the 4 equity-related things we do Monday, Wednesday, Friday. And again, you see the direction, the level, and the timing, so you can put stops in, because we believe it's very, very important, obviously, to have stops in.
Yes, and David, I know observers always like to go and add political things or, events in the world saying that's the reason why the markets are up today, or that's the reason why the markets are down. Do you follow the news when you make these predictions? No,
we think the news follows the cycles, not the other way around. Well, let me add to that. We think the cycles represent people's interpretation of events. Not the events themselves, but how they react to it. And since we're saying patterns repeat from the past, If there's a cycle top, we feel the news will be reacted to negatively. If there's a cycle bottom, we feel the news will be reacted to positively. Earnings will come out, and the news, if it's a cycle top, they've been up for 4 years, how could they continue? If it's a cycle bottom, they've had 4 good years, but we still believe new products in that product line will continue. Same data, just how it's interpreted. That's basically, the answer to your question is we don't believe the news runs the show. We need the cycles to, and the news comes along at the time the cycles and the target project. It's kind of a different way of looking at things, as you and I have discussed many times.
On precious metals, what's happening there?
Okay, so let's talk about metals and nat gas and crude. Okay, we'll talk about the resources. So gold and silver held above 1165, expected bounced back to just below 1200. Short-term cycles bottomed. While they bottomed, you still need to close above 1210 for a buy signal. Again, we don't go unless the cycles bottom and our target algorithm of the move is also there. We all moves, I always use a football analogy. I don't know if I've done on the show, but when a quarterback goes back, he counts 1, 2, 3, 4, and he throws to a spot where the receiver's going. Timing and then level. Same thing with trading. We think timing, short-term cycles have bottomed, but don't go into gold unless it's above 1210. If you're in, we think it's okay to hold. Silver had a nice bounce, still on a sell signal, close above 1675, cancels the sell signal. However, because cycles short-term at bottom, we have a new high around May 21st. So for 3 weeks or so, 2.5 weeks, silver should go up. Crude and nat gas. Crude, I got to tell you, I don't think anyone, I don't know, I don't read everybody else, but I don't think anyone's called what we've done. We gave a sell signal at 97 with a target of 94. First 70 and then 90, and 44, I'm sorry. And we gave a new buy signal 47, target of 60, which we got to, new high for this year. And then I wrote this week when I edited it, we don't see how fundamentals can predict these moves. Now dailies have topped. It's still in a buy signal, closed below 58.15, will trigger a sell signal from longs. Traders who are long should keep a tight stop or take.
We'll have more with David Gurwitz right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with David Gurwitz, Managing Director of the Charles Nenner Research Center. David, what's happening with natural gas?
Okay. Nat gas is a buy signal as long as there's no close below 256, and we still think there's a pop in that as well coming. Reasons we don't know, just cycles repeating in target. People say warm weather, why should it be? It doesn't go like that. So, we called it in January, very good call in nat gas. It's not so easy to play because the ETF related to it is not always tracked so well. But at least, people use our research to then do futures or whatever. Anyway, that's the nat gas story, so that follows up with crude and gold and silver.
On the bond market, what's happening there?
Okay. We look for weakness as is happening today. Short-term cycles are close to a low, and TLT, which is the big 20-year bond fund, closed above 122. We're still waiting for direction in bonds. It's on a sell signal. We're not looking to trade. Close above 125.50 TLT gives another buy signal. We do think long-term rates will go back up. Not much more they can go down. And the last 60 years has been a cycle. 30 years ago plus, rates were very high. 60 years ago plus, a couple of years they were very low. So that cycle has basically played itself out.
When you said you couldn't go any lower, well, what about Germany, where they have negative
Germany
bonds?
went lower. They went negative. And the thing we're warning people, if they're in bonds, that's a crowded trade. What happens if they want to sell? Who's going to buy? So all of a sudden, it could be a tremendous capital loss. Is it worth it?
So what is the signal for the German bunds?
Well, the German bunds, right, which is bunds, that's on a sell signal, and it stopped at our level of 154.60. And it's, again, short term we're giving. looks like while they're negative, they're going to continue to be. Negative rates, meaning people are actually paying the banks to hold the bonds, net of the interest rate and the inflation.
You might as well bury your money in the backyard if you're going to do that.
Listen, the big guys that we know, and some of them are our clients, I'm not going to mention their names, running $100 billion, $150 billion, they find much more liquidity to be in stocks, even if they're long or short, than even in bonds. They're so concerned about that. At least they can move stocks around. So that's what they do. Even if they don't want to be long, they'd rather be offsetting long and short in stocks than very often just to be in a certain bond position or something because of liquidity.
The euro, what's the line on that?
So the euro, we were long. Everyone thought it was going to par. We didn't. It's on a buy signal still. But if it closed below 109.85, it gives a short-term sell signal. 5 years ago, when the euro was 151, 3 months before the first Greek crisis, we said that was the top, and it went to 122 and then 118. So how do we explain it? Cycles.
The Australian dollar.
Same thing. It's been a good long, and we saw the bounce, and the buy signal continues as long as there's no close below 77.40. It was interesting when the Aussie was 68, as was the Canadian years ago. We said they'd go to par, and it went past par, and it came back down, and now it's up again as we called. So the Aussie's up, the Canadian, we're looking for more Canadian strength. So basically, dollar weakness. Euro strong, Aussie strong, Canadian strong.
The Japanese yen, now, is that any different than what's happening with other currencies?
Yes. The dollar yen seems to be stuck in a trading range. We're looking for a stronger yen. So in that sense, it's the same. We need it to break out of its trading range between 125 and 1850.
David, is there anything else you wanted to add from your newsletter?
That's for now. I mean, we covered the euro yen also, but that's something. I think for now, the best thing, we think the stocks are down. We think bonds will be down. It's interesting. Janet Yellen said the same thing. She thinks both stocks and bonds are overpriced, and we happen to agree, which just goes to show they sometimes go same direction, sometimes they go opposite.
Somebody said, what does she know about equities and bonds? She's a labor specialist.
She's no dummy. Let's be honest. She's not a dumb lady. It's a hard job.
Yeah.
I wouldn't want that job.
I was going to say, no matter what you do, nobody thanks you.
Right. So I wouldn't want that job. And she's no dummy. But having said that, do we think the Fed would call us and listen to us? I think they should, because we see stuff sometimes that they don't know how to have a model for unemployment as well. They look 1 quarter, 2 quarters. We're looking back 50, 80 years, and they don't seem to be able to do that. So when they get a surprise in something, they're always surprised, and we're saying, no, this is what cycles show that happen. So that's something, we think is also unemployment's going to increase. We don't think such easy times are coming, and people should really become overall much more protective. Having said that, there's some great ideas. Crude, while it certainly could back off here, and we think it will, the longer term could go way back up again. So it's something people should think about and perhaps consider playing in that regard.
Do some of these people need to have more of a Chinese attitude where you plan or look ahead 5, 10, 50, 100 years instead of going quarter to quarter?
That's hard. I'm not saying it's bad. I'm just saying it's hard. Because look at all the people who went into gold. How about the country of Canada? How about the western provinces that are $5 billion swing negative in the last budget? It's hard when you're playing long. Right, which in essence is what most people and institutions do, to always assume things are going to go up. Bonds have been up for 30 years. Stocks have been up for 30 years. Not always, obviously, but will that always continue? There's no way. So if by definition people are betting long, they'll be right a lot, but they're going to be wrong a lot. And what we try and do is simply advise when we think from a timing perspective, don't be long. If you want to not be short, fine, but get out. And those are two very hard decisions, to go to cash in the first place and then to go short in second place. Not so easy. So your listeners are a broad band of listeners. They've written into us, and you get everything. So we just try and show what we see, and most of the time we're right. That much I could say. And in certain areas, more than most, and, like this crude call, 97 to 44, 47 to 60, now back down. We think the next move after that will be way up. how many people want to play it, and I know in Texas, I have a lot of clients there, a lot of, property stopped and budget stopped and banking stopped and deals stopped. And I was telling someone the other day who was in the business for 30 years, if someone had a lot of money, it'd be a great time to go into all these projects and go, I want to be partners, here's money, I'll take a little this and a little that, and just, be opportunistic. But that's the best way to make money, when you can be opportunistic, and it's not easy for most people to think that way.
Yeah, they tend to either see, the very bottom and predict things from that, or they look at the top and say things will get better. And you're saying, well, according to cycles, maybe you should look at things just a little differently.
And that, every time I'm on the show, I kind of say the same thing, because it's all we know. Patterns repeat. The news means almost nothing. We can also give you targets, and think about it and don't overtrade. David,
very good advice, and thanks a lot for chatting with us.
Pleasure. Always look forward to continuing.
My guest has been David Gurwitz, Managing Director of the Charles Nenner Research Center, their website, charlesnenner.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.